wanted to take the opportunity to catch up with you regarding the changes in Dated Brent. Now that we're 3 months into the new framework of Dated Brent, adding and including WTI for the first time from June. The planning switchover triggered a lot of debate in the market as you prepared the market for the change over a few years, maybe even causing some sleepless nights for some physical oil traders. I'm wondering, was that that concern warranted? How has the amended contract performed in the first 3 months? Has there been any big dramas or kind of business as usual?
Thank you, Sean. And the changes to Brent, the global oil benchmark for crude oil, has been a 3-year project that on the Platts side we've been leading the discussion on. And as you say, Midland came into the Brent benchmark from June of this year. We actually began assessing Brent with Midland included on May the 1st. So we've now got 4 months of observable data around how Midland's performing. And there's a couple of things I'd share on today's team talk, which is firstly, it's been well embraced by the market. The inclusion of Midland into the Brent benchmark, I think, is now almost universally accepted as a reflection of the fact that Midland is a critical baseload crude oil in the North Sea light sweet crude oil market. It's also, by the way, a critical baseload crude oil in the Asia Pacific light sweet crude market. So there's an acceptance and a support for the idea that Midland is part of North Sea crude economics. So if the philosophical discussion is done because Midland is now in the benchmark, just like it was in Europe anyways to begin with. On the technical side of things, when we began assessing Brent with Midland included in May, Midland was the most competitive grade in the North Sea for about 40% of the time. It effectively was the critical force in shaping the Brent assessment, 40% of the time. In June, it became as much as 75% of the time, which is when you saw a lot of conversation, particularly around, is there too much Midland in Brent? Is Brent simply Midland? These are sorts of conversations we were hearing with the market. It's to be expected that when a new crude comes into a benchmark, market participants and traders want to test the dynamic and see how it works. The dynamic and the methodology performed very well. We haven't heard any complaints or disagreement about how the mechanism worked. And then in July and August, actually, Midland normalized its role in the Brent benchmark. It was around 40% of the time, again, competitive in July, and about 20% of the time competitive in August. So we've seen Midland taking on the balancing element that Forties has, and that even Oseberg and Ekofisk have sometimes. Brent itself is the most competitive grade occasionally, even today, even though it's a relatively small stream, right? So that's a bit of a long-winded way of saying it came in, it had a big impact at the beginning, it's now normalized its role, and the market's gotten on with trading. I think the values that we see in Brent reflect the global market, and that's the biggest test of all. I mean, right now as we speak, Brent is closer to $96 a barrel because it's reflecting a tighter fundamental market dynamic than we saw 3 or 4 months ago. And Midland being in the basket has allowed that to happen without disruption, without spikes, without anomalous market behavior. And that's the key reason why it's in the benchmark to begin with.
When you think about, obviously, the benchmark that is a basket now with Midland, but previously 5 other crudes, and no 2 crudes ultimately are identical, which makes the magic of this business, I suppose. But do you think Platts eventually have to evaluate precisely how WTI Midland compares with the other grades within BFOET?
So we examine in minute detail the relative competitiveness of Midland, OZ, Echo, Troll, all 6 grades in the benchmark. We examine their competitiveness and their inherent worth every single day. So if anybody wants to know what's the relative value on a refining margin basis, what's the relative value on a spot market basis, we will have that conversation endlessly. Usually people want to pack up and make a run for it once we really get into that topic. So we've been doing that homework from the very beginning of this project 3 years ago, and we still do it today because the very specific, and we get to the pennies on the barrel, the very specific value of each of these crudes, that is our business actually. So we're doing it now. We will always be doing it because the key question for the market is what is the specific value of each of these 6 grades of crude oil as part of the basket. So that work goes on today, Sean. The other thing I'd mention is, not all U.S. crude is deliverable into Brent. Not even all WTI is deliverable into Brent. It's really a subsection of U.S. crude exports that's deliverable into Brent. And that stream of crude, Midland grade, unblended from the terminals that we've approved, that has a market value which is very different to the WTI and even the Midland you see talked about inside the United States. And that's important too.
Just to wrap up, Dave, one of the other sort of areas of concern before the launch of Midland into the basket was the cargo sizes allowed to be included at 700,000 barrels, which didn't really match the reality of current trading. As you said, a lot of oil moving between the US and Europe now for a while, and they're typically 2 million barrel, very large crude carrier cargoes that cross the Atlantic, but they don't qualify to be included in setting the dated Brent. Has this transpired to be any kind of issue in the first few months?
No issue from an implementation perspective. For Midland to play its role in the North Sea, it needs to trade like crude oil in the North Sea. Actually, North Sea crude and Midland had to meet each other halfway a little bit here. Prior to the change, the cargo size in the North Sea was actually 600,000 barrels. 700 was the more typical Aframax size coming out of the US Gulf Coast. So in fact, we amended from a methodology perspective, the size of North Sea cargoes to be 700,000 barrel Aframaxes as well. So we've done a little bit of reshaping from a methodology perspective on cargoes in the North Sea to accommodate a typical Aframax flow from the Gulf Coast. But that is how a lot of crude flows out of the Gulf Coast into the North Sea, is on Aframaxes. So to fit into the basket, it needs to trade like the rest of the basket, and the market has embraced that.
Well, just to sign off on the inevitable always question, where is the price of oil going to be over the next 3 months as we come knocking on the door of $100 a barrel? Was there any consensus coming out of APEC, which I think was in the few days in which Saudi Arabia announced that it would be extending its cut through the end of the year? Did that trigger a more bullish outlook for oil prices through to the end of the year?
Interestingly, no. 55% of our audience voted that they expected Platts Dubai to be around 80 to 90 dollars a barrel by the end of this year. You could add a few dollars to that for Brent, although these days they're actually quite close in value because of the sweet sour, light sweet, light heavy spreads out there. But 80 to 90 was the headline number that most people expected to see at the end of the year. We're already above that, but it's not an unreasonable perspective to think that by the time we get to the end of December, the market may have come back a little bit. There's talk already of Saudi Arabia potentially tapering its cuts. We know Russia is quite keen to get more barrels back into the market again whenever the opportunity is there. So it's not unreasonable to think supply might ease up. And of course, these futures markets are always trading 2 months ahead. So as we sit here in September, we're really pricing November. By the time we get to December, we're pricing February and March. And that is a relatively slack period for demand. So 55% of the audience said below 90, but above 80 by the end of the year. It doesn't seem unreasonable sitting here in September.
Well, it certainly would be the appropriate number for what is of critical importance to the producers where I'm sitting here in the Gulf, and that is what is the average price of Brent through the course of 2023. And I think indeed that will be in that $80 to $90 bracket, unless we see some meteoric rise into the hundreds. And I think that it would be a sweet spot that everybody would be happy with. Listen, we'll have to wrap it up there. Absolute pleasure to catch up with Dave Ernsberger, Head of Market Reporting and Trading Solutions at S&P Global Commodity Insights. And we didn't even talk about Southampton. We'll have to leave that for another day.
We'll save that for another time. See you in October. We'll talk about it there.
Okay. Thanks, Dave.
Bye.